welcome to the Closing Beat, everybody. Happy Monday. How you doing? Talk a little softer today. My daughter says I yell on the show. You know what I mean? I'm just gonna keep it cool. Keep it cool. Tough day to keep it cool, by the way. You see it, oil? Oh my gosh, so exciting. Hey, welcome to our show. We call it the Closing Beat. We're financial advisors here at Jazz Wealth. And we just cover the stock market. Not really an opinionated, tell you what to do kind of channel. Just give you the stats, all the good stuff, let you go do what you got to do. If you're one of our customers, every Thursday we do a class for our customers based on, teaching more. We like to teach and kind of update and everything, get more specific in those classes. This Thursday is going to be really cool because we're actually going to go to every single time the stock market fell 25% or more in the entire life of the stock market. We're going to show every single time and go, was it a bottom? When it bounced off of a decline of at least 20% or 25%, we'll see what we come up with. Every time it bounced, was that the bottom? Or was there a new low? What happened afterwards? So we're going to analyze all that, share some geeky data with you. That'll be this Thursday, I believe. Hey, we're playing a game. It's called Guess the Dow. Our customer, Jamie, won last week. But if you'd like to take a guess, you don't have to be a customer. You can play along there, jazzwealth.com/guess the Dow. You're welcome to play the game. Our Jazz Artist of the Week is going to be Art Blakey. If you don't know, right there is a drum set. And you can't see it. It's just out of the camera. But right here, ready? Seriously. There's the whole drum set's right there. And this week, we're attributing our Jazz Artist of the Week to Art Blakey. He's got a song called Along Came Betty. Just a fun evening jazz tune if you want to take a listen to that. Have a good time with it. All right, oil was the big focus today. Oh my gosh, you got the May contracts expiring. Well, technically tomorrow, you just can't buy them anymore. Well, or sell them, which is what was trying to happen today. Basically, what happened is the price of oil, you saw WTI go negative. A lot of people didn't think it could go negative. And in fact, in our Outside the Virus show we were watching it happen as we were talking, and it was like, I've never seen that before. It's because it's never happened, actually. We'll cover a little bit of that later to get into more detail there for you. But I thought the stock market held up quite nicely considering the disaster in oil today. So let's take a look at the S&P 500. We're in the chop zone. I think that's what we're going to start calling it now. I drew this line early last week to kind of say, even though we look like we're moving past it, this is the chop zone. This is where we're going to see a lot of back and forth, maybe get our pullback for those of you that want to see the pullback. So I'm going to leave that line there. You can see the stock market unclear about what to do here. You can look back at our previous classes to see why we talked about that, why we put that there. I'm going to bring my voice down again because I noticed I was getting a little loud. You see what I'm saying? I'm learning. Also, the small business loans that were supposed to come out, they're out of money, right? They had the $400 some billion, 350 or something billion dollars out. The businesses soaked it all up, and so Congress is supposed to vote on having the new additional funding coming out. Well, that was delayed as well. I still thought the stock market held up quite well. Naturally, we're down on the day, about 2% for the S&P because of oil mostly, and we'll go through some of the other names as well. If you're looking through the stock market there, you've got the Dow lower on the day as well. The NASDAQ was the strongest out of the groups today, holding up there near those highs, continues to be the strongest. Actually, NASDAQ 100, which I'm showing here, went positive on the year. Now it's just briefly back down below negative, not a big deal there. And the Dow was the weakest, by the way, mostly thanks to Boeing. So Boeing was down on the day, got a downgrade, also lost 69 more 737 MAX planes that got canceled there. So that's not happening there as well. Now we've got earnings continuing this week. Last week we had 31 names on Outside the Virus. We actually shared the first total week stats for all the earnings in there. Old Cody did well, not giggling when I said Lovesac was actually, how do you not laugh at that? Was the best performing stock last week. Lovesac, if you don't know, is a furniture producer. They make couches and stuff. It's actually a pretty cool company. They just have a funny name. But anyways, that was the best performing one there. On Outside the Virus, we also covered briefly the stats on what happens if you bought 1 month before a big decline in the market, or you missed the bottom and you bought 1 month after. How would you fare 12 months later? So trying to use that show to maybe share some extra stuff there with you as well. So hope you check that out. Our FinTips video this week was about picking tech stocks for different types of portfolios. You might want to check that out. Came out at 1 o'clock today. We use Goldman Sachs as a reference in some of their picks there to kind of show what if you think the economy is going to take a while to recover, what if you're investing for the long term but you want to buy some tech stocks that are maybe highly discounted. Really cool and very specific, actually. I don't know if I was allowed to do that video, to be honest, so if I get in trouble, may have to take it down. You may want to watch it before we have to take it down because that was very specific, maybe a lot more specific than we used to be there. Anyways, that's the stock market there. Let's get into the sectors today, and we're going to start with the price of oil. All right, let's spend a minute on this. Now, what I'm showing you here is actually the June contract. Oil mostly has contracts that expire every month, the futures contracts, and I always share the futures contracts with you. So what you're seeing here, this gap up was not actually performance related, it was just the roll on the charts there. So it's the price adjustment for the roll there. Today, oil hit 21-year lows, right? I don't know. I saw $1.62 out at, it was a Wawa. We have a gas station here called Wawa. I saw $1.62 this weekend. How'd you do? You seeing low gas prices out there? Actually, there's a bit of a disconnect. The last time oil prices were this low, the average price of gasoline was about 98 cents a gallon. And right now we're sitting about national average of $1.81. So twice what it used to be. So there's a bit of a disconnect there. It means if you're thinking gas prices are going to come down, you're probably right. We're working our way down there. What happened today is the May contract of the WTI, well, I'm showing light sweet crude here for the moment. I don't have WTI loaded up. WTI actually went negative. Yes, it can go negative. The price of oil can actually go negative, just like interest rates. What does that mean? I've thought about doing videos in the past on this, just thought it was too geeky, too boring, but seems relevant now, so let's dig into this a little bit. What happens is when you buy an oil futures contract, you are essentially buying a barrel of oil. In this case, when I'm showing the light sweet crude, you're actually buying a barrel of oil. And if you'd like, you can actually accept the barrel of oil. You're not buying the whole barrel for the 20 bucks, you're just essentially participating in it. Well, when the contract expires, if you're using a brokerage account, what happens is it expires to cash. And so you can roll it forward, you can let it expire to cash, take the profit or loss, whatever you want to do, or you can just close a position. If you are in the space, in the industry, you can actually hedge or use this as an opportunity to buy oil at cheaper prices. What happened today with WTI falling 300%, by the way, but falling to negative $37 a barrel, what happened there is if you owned it, now if you wanted to take delivery, it was the inverse of that. It meant that you were giving delivery to somebody and having to pay $37 on top of whatever you paid for the contract, having to pay $37 for someone to take your oil. It meant that people out there were not willing to take delivery of your oil unless you paid them more money. That has never happened before in the history of oil prices there. Like I said, it finished negative. It closed down today. Technically, it expires tomorrow, but it closed down today. It's the last day of trading. Down negative $37. Not the loss was $37. The value was negative $37 right there. So really, really interesting there. Now, to kind of equate that to things that most of you guys probably look at, let's go over to USO. USO is the U.S. Oil Fund, and did a little extra geeky research here for you, so we had something relevant to offer. You saw USO down today, gap down 10%. It's the fourth largest gap down in history if you were to happen to look at the USO looking back. Funny enough, you don't have to go very far back. The last three largest gap downs in history come in the last 3 months. You can see them on the charts right there. So those were the largest there. Now, for USO, if you're saying, I own this, I'm worried, what do I do? USO has already rolled forward into the June and July contracts. About 80% of the money that's invested in USO is already in the June contract moving forward. The rest of it is into July and also some cash as well. They don't have any May contracts at the moment. They're actually not allowed to run it to the bell like that. So they'd never allow this happened like 2 weeks ago. They're not allowed to let it go that far. Here's the problem. In these commodity ETFs, you are buying the ETF. The company is buying the individual commodities, and they use mostly futures to do that. There's something called contango, and if you're familiar with what this means, I don't have to go into this one at the moment, but what it means is when they're in the May contract and now you want to roll forward to the June contract, sometimes it costs money to do that, and sometimes they could do it at a net credit, meaning they can actually collect money to do that. Right now we're in a period where if you want to continue your trade into June, July, etc., I believe as far as July, you have to pay a debit, meaning you have to pay money to roll your contract. Well, as an ETF, as a business, they have to move. They have to keep rolling nonstop because you're invested in the USO. Who do you think pays for the roll, right? And to give you an example, for them to go from May to June was 50% premium to do that, meaning they had to pay 50% more to roll that. That's the most ever in history, by the way. That cost to roll to the next contract gets passed on to you, right? So they take it out of the value of the ETF, and this is why there's a natural drag, or at least at the moment, there's a natural drag, they would say, on the USO. If you want to research it or you want to do some homework, you want to look up the current drag on USO or something. That's the kind of technical term that people use. 50%, that's the largest contango spread on record, meaning the largest spread between the back month and the front month. June currently counts as the front month. I told you it was geeky. I don't know if this is something that really interests you. Just leave a comment or something, and maybe we can work out just a separate video where we get together, sit on the couch, grab a pipe or something, and just like hang out and talk about this. I could talk about it all day long, but this is really just to update you for today. Now, that's the USO. That's the direct ETF play in the oil. You could play oil in other ways. You can actually play the oil exploration companies. You could play the producers, the distribution companies. You can play all kinds of stuff. What I want to show with you real quick here is the divergence, the current spread between the price of oil by using USO and the oil explorers and the oil service stocks. This is not normal. Take a look at this here on the charts. The blue line represents the USO, obviously trending lower, going very poorly. If you look back over the last 1 month, this is what I have on the screen, you could see the now divergence where you've got XOP moving higher, you've got OIH moving higher. If you zoom out and start looking over the years, this is not common. They are typically very closely correlated. Not perfectly, but very closely. If I go out as far as I can here, you can see that correlation. We've got a little bit of a spread in the short term. Traders will look at that and look to place either maybe a pairs trade or something on this one, or somehow play that divergence. You can use options or futures directly if you want to. But bottom line is, if you look in the short term, there is a spread between oil and the oil exploration stocks. Why is that? Anybody want to guess? I think there's like a 15-second delay, so I won't bore you guys with this here or make you guess and sit back and wait. There's a spread because the companies inside of the XOP and the OIH are really starting to hold their own, right? The economy coming back on track, people are starting to make bets that oil demand will increase. Not tomorrow, but little by little oil demand will increase. The thousands of planes sitting at airports not doing anything, or for Boeing, the planes literally sitting in their parking lots, they expect those will get back in the air and will start burning oil like crazy. So those companies are doing well. Also, a lot of these companies did well today because they had they were the recipient of the contracts, meaning they got to collect the $37 from the people that needed to offload their contracts. Otherwise, they had to take delivery of the inventory. The problem is, there's nowhere to put the inventory. It's like if I filled up this studio with barrels of oil, at some point I would run out of space, and it's no longer worth it for me to get another building to put more oil in. It's just worth it for me to pay the $37 to give back my contract. So that's the difference right there in that those oil companies versus the price of oil at the moment. Very unique spreads, something that we don't like really talk about or look at day to day, but with this historic move today, certainly something I wanted to highlight. I'll take questions at the end if I happen to miss something, but I just wanted to point some of that out there. If it was way over some of your heads or all of your heads, I apologize, but that's the detailed look. That's about as simple as I can make it to try to explain the basics of that. All right, let's dig in here a little bit. I'll zoom out the charts, make them a little bigger, because I don't know why I changed that, but the news is down at the bottom. We'll make the bigger charts there. All right, XLV, that's your healthcare today, was the strongest. I mean, it did lose today, but it was the strongest out of the ETFs today. It's also the strongest over the last 5 days and over the last 3 months. Some of the standouts in that category also hit new highs today. Abbott Labs, 2% as well, 2% higher to new highs. BMY, not new highs, but up about 2% as well. Healthcare remains one of the stronger areas. You had REITs pulling back today about 3% on the day, and you look at utilities did the same. They're both in the same general area. If you're a technical analyst, you're looking at that 50-day moving average. That's acting as an obvious resistance area to the upside there. Rates rising a little bit did help slow the recent rally here in these two sectors if you're playing along. And energy, by the way, XLE, that one gets the most improved intraday award, right? The sector, or not the ETF that did the best. It actually started off down on the day, rallied quite strong, but then when the whole oil collapse happened there, that pretty much took care of it. And same with the market. The market's actually tried to recover throughout the day, and we're doing really well. But with that hit in oil there, you saw the decline. So that's that one. If we look at some of the stocks in the news, and I'll get out of your way. You got IBM, a little bit higher today. After hours, I believe it's down about 1.25%, now down about 2.75% on the day. After hours, because they came out with earnings. They beat on earnings by 4 cents. Revenue missed, very tiny miss there on earnings. They're going to continue their dividend, so if you're investing in them for the dividend yield, which is pushing about 5.5% overall yield there, that's going to be intact. We're talking billions of dollars they got to pay out for the first quarter. Anyways, no guidance going forward. It's going to be one of those earnings seasons where companies just don't give guidance. They don't have to. They've all sort of band together and decided not to. Red Hat, which is a company they just acquired, revenue slowing a little bit there. It was up 18%, but as I look, It was 24%, I believe, last quarter. Someone could check me on that. And they're really counting on that. That was the acquisition that was supposed to turn around IBM. I did a whole thing on it in one of these classes, but that's that case. So anyways, you got shares a little bit lower there. The average earnings day move, by the way, I shared that in the, wait, what was that one? No, I shared that in our notes from Jazz email this weekend. The average earning day move is 0.55% to the upside. Tells you it's a pretty muted stock around earnings there, and we've covered some of that in the past if you've been watching. Pepsi down 2% on the day. The FTC is looking to approve the Rockstar Energy purchase. They are acquiring Rockstar Energy, and all is looking good there. You might have noticed FLIR. If you have any sort of volume scanner or volatility scanner that automatically spits out these stocks to you, then FLIR most likely made it on your list. Up 14% on the day. Amazon is using, they're going to use some of their thermal equipment to better test and to more quickly test employees coming back to work to see if they have the virus rather than zapping everybody when they walk in there. By the way, for FLIR Systems, we want to look into them. That's what they do. They make those thermal cameras. It was its best two-day gain since 2009. Financial crisis there. So it gives you an idea of the type of volatility that stock saw today. As for the new highs today, I don't need to go over all of them. You've got the biotech stocks, a lot of them. INSEE moved higher, that's what I call it, moved to highs as well. Lilly, Vertex was another one. These are stocks that have all been on the 52-week high list, and rather than go through all of them like Abbott and everything, let's go back to INSEE for a second. Got a stats play here for you. So Insight is the name of the company. I call it INSEE just from the ticker symbol there. Here's a little bit of data for you. It is currently right where it's at. You can see it just over $100, very extended in the short term on a short-term sort of technical basis is how you would say it. The stock is actually historically lower over the next 5 days. The average decline for INSEE is about 1.2% over the next 5 days, and 65% of the time it falls when it's as extended as it currently is. It falls over the next 5 days. So we're going to track that. We're going to follow it as we do when these stats plays come up, and we'll see what happens there. It's not a stock recommendation in any way. It's just a statistic, right? Take it for what it is, and let's follow along and have some fun. Diamond Offshore is the only 52-week low on the day, down 2%. All right. I'm going to go through some of the stocks that are affected by the virus, changes that they're making there, and we'll take your questions after that. Shake Shack, well, did it finish higher today? So Shake Shack, yep, at about 6%, was higher by about 10% on the day. They're going to raise hourly workers' the work by the hour, people in their stores, the different shacks. They're going to raise their hourly wages by 10%, and they're going to give bonuses to store managers as they get back running. Interestingly, they didn't put any criteria on that. So it doesn't matter whether the store does well or the store does poorly, managers are going to get a bonus there. They also returned $10 million to the government, and they made it seem like, oh, we're just going to do our own thing. You know why they returned the $10 million? Because they sold $140 million worth of stock over the last couple days, and so they've got plenty of cash in the bank there. You've got Airbus, and if you want to look at it, can I pull it up? Yeah, Airbus, you can actually look at the ADR if you want. EADSY is the way to look at it. But Airbus shares were higher by about 2.6%. They're going to furlough 3,000 employees in France. So finally, maybe Boeing getting a little bit of it seemed like Airbus was kicking their butt lately, right? So finally a little bit of headwinds there for Airbus. You got Colony Credit. This is a REIT, by the way. They're suspending their monthly dividends. I'm not sure how they're doing that. Maybe they're going to quarterly. They can't technically just cut their dividends unless they don't have a profit. So that may be a heads up there. I didn't really look into that, but they're really not allowed to just suspend dividends overall. So it may be that they're going to go to a quarterly type dividend. Not good for them. Disney down 4% on the day. They're going to stop paying 100,000 workers because the parks are closed. Macy's down 10%. They're looking for some rescue financing. I mentioned this a couple weeks ago. Macy's, can they make it through this downturn? I don't know, right? You had Macy's, you got Neiman Marcus over the weekend looking to file for bankruptcy. You had JCPenney, they're looking to file for bankruptcy. This is a disaster for some of these big guys out there. So we'll see. Norwegian Cruise Lines, shares were down 7%, but overall, given the volatility, they were basically flat, starting to really calm down there. They've looked to Goldman Sachs to get them some financing help to raise some money there, so expect to see something in the form of some kind of debt offering like Carnival Cruise did a while back. I believe Royal Caribbean did the same. Royal Caribbean, by the way, is extending the suspension of their sailings all around the world until June 11th, so that really starting to eat into their summertime sail away sort of programs that they have there. And Uber is going to get back into delivering goods, not just foods and people. All right, let's do this. You got earnings tomorrow. HCA Hospitals, JetBlue, Coca-Cola, Lockheed Martin. There's a lot of them, hundreds of names. I won't read them all off to you. Packer Transportation Company, Philip Morris, SAP, Travelers, Chipotle Group, yay. Netflix and Texas Instruments all are going to report tomorrow. Try to cover as much of that as we can. Clorox is ex-dividend day, $1.06 being paid out. Good. Apache paying out 25 cents. And now I will try to take your questions if you happen to have any there and see what we can do. Hope I didn't go too long on the oil thing. Like I said, if it's interesting, leave a comment or something. If it's not, I will move on. You've been playing in, Arturo's playing in the REIT space there. All right, very volatile. I'll give you that. Utilities also very volatile. Typically a sector that traders don't go to, but a lot of action over there in utility land there. Yep. Tandra's short again. Yeah, you are. You're a bear. Tandra's our resident bear. Yep. Uber's pretty limited around me, actually. So in terms of using Uber, I don't really use it. I've used it once. I got my wife's car windows tinted, and so she was out of town. I was trying to surprise her, so I drove it there, and then I took an Uber back. Nice guy. Otherwise, around here, it's not really that popular. They deliver food. I've seen people do that. Grubhub, not Grubhub. What do we use? DoorDash? DoorDash is more popular around here. Keep in mind, you've got a lot of time on this oil. This is not a one-day, yay, let's go buy it. This is a demand issue. All through last week and the week before, we've been talking about OPEC and their cuts and everything and what they're cutting and not cutting enough and talking about the overall demand. This is a long-term play. Any plays in oil, I think, is a long-term play. I think it's a tough place to be a trader right now, unless you're really active. Yeah. Yeah, you got it. Long-term on Carnival Cruise, you got to assume that. I mean, that's not just my opinion. I think that's just a respectable assumption there, that people are going to go drive to work first. Then they may have to fly for work or to see family or whatever. Then they might consider a cruise, right? I know I'll be one of the first ones on there. Maybe I'll wear a mask. I don't know, but one of our customers is a cruise planner, and I'm like, hey, we're going to talk, because I got to imagine that's going to be some pretty good deals there. Yep. There's a lot of different oil ETFs, so you want to do your research there. Like, there's many different ways to play them, so I'm not sure how you're referring to playing oil. Yep. Stats on sell in May and go away. We're almost there. Yep. Maybe expand on that. What if the early part of the year? I like it. I like it. Yeah, every year we do the sell in May and go away stats. We'll highlight those. I like the idea of, you hear that? I like the idea of highlighting what if the year was already down to some degree. Maybe we can try different like 10%, 15%, see what happens. I got the angry face. I didn't like that idea. More work. That's funny. Think REITs are oversold? No way. No. From now, not my opinion, just technical traders won't look at that and say oversold, right? We're working our way back to neutral. In the short term, they were overbought. But that's not my opinion. That's just how they're currently trading. Yep. I'm really fascinated by this Turnaround Tuesday nonsense. Turnaround Tuesday, Whack-'em Wednesday. Let's see. Can we put another week? So if you don't know, Mondays have been mixed. Tuesdays, mostly we've seen Mondays lower, but they've been mixed. We can't say that they've all been down. But Tuesdays have been historically strong, Wednesdays weak. And by historically, I mean just in the last 6 weeks. But that'll be fun. We'll just keep watching it. I mean, it's too short of a time frame to make any serious decisions, but it's fun to watch. Yeah. Who needs a haircut out there? Man, I mean, right? I just gave up. I really just gave up. I mean, like I said, I'm happy to have hair there. you know, and it's still like trying to grow, but oh my gosh, I don't like having shaky hair, man. I don't like it. Just don't like it. Well, you can add the shift to, so the comment was oil's not done, the shift to electric vehicles is still steady but slow. That's just a minute fraction. I mean, at some point it's going to do well, but that's a minute fraction of the reduction in the oil demand. So that's a piece of it, but it's a very small piece. Yep. We'll see. Wayfair had a good day today. Yeah, up 12%. That was in our video from earlier today. No, that'll be in our video on, well, I don't remember. We're going to be talking about that one. We'll be talking about it soon. Sorry if I missed any of your questions here. Sometimes it blurps, it like bleeps up there. Like it looks like it froze, but now I know better. It didn't freeze. 10 years ago, started growing out your hair. No, I'm not growing out my hair. No, you don't want it to happen. You think Apple will pull back per the Goldman Sachs comment there? I don't know about 233. That's ambitious. I think Goldman will eventually upgrade Apple, especially after earnings coming up here. I do like the idea of it pulling back. We'll just have to see how the markets go, because right now it's holding up pretty well, I think. Yep. Well, I didn't want to make this one too long. I'm sorry. I will wrap it up there. I covered everything on the sheets there. Oh, Teladoc, by the way, got mentioned in Barron's over the weekend as a way to play the digital revolution in medicine. It's a little bit late to the game. I think most people already discovered old Teladoc, but we'll see what happens there. I will wrap it up there. I appreciate you guys watching, and we'll talk to you again tomorrow. We'll do this all over again. Check out our other 2 videos from today. I do appreciate it. And we may even try a nighttime video this week, because I know a lot of people are at home. See if we can't teach you something a little different, be a little more laid back. Enjoy your day, and we'll see you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.